In terms of the domestic equity market, we saw the indexes remain broadly flat week over week, with the ASPI rising 19 points to 10,586, while the S&P SL20 rose 22 points to 3,048. In terms of market turnover, last week was down 71% to 4.3 billion compared to the previous week due to 11 billion rupee JKH crossing. The equity market ended last week positively, and we expect this trend to continue this week as interest rates for government securities fall and equities become a more attractive investment option. At last week's Treasury bill and bond auctions, we saw interest rates decline significantly across the board. The 3 and 6 month Treasury bills fell to single-digit levels, while the 12-month bill settled at 10.02%. Year to date, the 3, 6 and 12-month Treasury bills fell by 472, 430 and 291 basis points, while the 2026 and 2028 Treasury bonds noted a 227 and 176 basis points reduction. Both auctions last week were fully subscribed and the government was able to raise 190 billion rupees. This week, the government will try and raise 120 billion rupees through Treasury bills. And in terms of global markets, last week the US indexes such as the Nasdaq, Dow Jones and S&P 500 recorded weekly declines, while crude oil prices settled higher on geopolitical tensions in the Middle East, with Brent oil rising to over $83 per barrel.